Now is an amazing moment for me because we just hit the 1000 subscriber milestone on YouTube. It wouldn't have been possible without you guys. If I was to do it alone, I would have had only one subscriber, that's myself, one like video and one view. But here I am having 1000 subscriber, hundreds of views, thousands of views, amazing comments. The support is massive. The journey so far has been so great with you guys. It has been very much easy with you guys. It has been an amazing journey so far, and I really appreciate the support. A big thanks to all of you, everyone who subscribed, has always been engaging in my videos, liking, commenting, sharing my videos, recommending my channel to friends. You guys made it possible. Doing this every day has not been easy, but because of the massive love and support that I get from you guys, I stay gingered to make videos every day, to educate you guys on trading, to put out more educative contents, and it's really been an awesome journey. So a big thank you to you all for the support. It really means a lot. Like, I'm short of words. Thank you guys, thank you so much. So in today's video, I'll be sharing with you guys this powerful strategy that I use in approaching the market. Whenever I want to look out for trade opportunities, it's advisable to go to the higher time frame. Despite the strategy you're using, the lower time frame could be giving you a signal on a sell on a particular index, while the higher time frame, the overall time frame, is telling you that the market structure is bullish, or the market is to head to the upside. So it's advisable to analyze each and every time frame. They all count. If they don't count, there wouldn't be series of time frames. Like, there would have been only one time frame, like only the daily time frame or only the 4-hour time frame. But we have the 1 minute time frame, the 5-minute time frame, the 15-minute time frame, the 30-minute time frame, 1 hour, 4 hour, the daily time frame, the weekly and the monthly time frame, So we should make use of all these time frames whenever we want to analyze the market. So on the daily time frame on 25-1S, basically, we can see the overall market direction. We can see the overall market direction. Let's say we want to trade in this market direction. Let's say we want to look out for trade opportunities. Our interest should be on the sell side of the market. Like, we should be looking out for sales on this index, because I've seen the market heading to the downside, giving us this downward direction. So, but we have to go to the lower time frame to identify these levels and this structure on the lower time frame. So I've seen this particular market formation at this point on the 4-hour time frame. We have seen the market giving us this structure, this descending channel in this hour range. So let's say we want to look out for sales in this hour zone. The first thing I've taken note of is the market direction, which is the market giving us a downward move, like a downtrend. Now we got the market giving us this reversal formation, this left shoulder, the head, and the right shoulder. This formation was formed in this hour downtrend. So there's no how the market wouldn't sell on the break of this hour structure. There's no how the market wouldn't give us a sell at this point after this formation, because I've seen the overall market direction. The market is trending to the downside, and on the market trending to the downside, you now got the market giving us this reversal formation. This reversal formation applied in the original market direction, which is the market trending to the downside, and this reversal formation is actually a bearish reversal formation. For us to get a bearish reversal formation in a downtrend signifies a sell. So if you are to say that if the market is to break this reversal formation, and the retest of it, like the break and retest of this reversal formation, taking the sales at this point. Let's assume you sold at this zone, and you got the retracement at this point, and see how the market is still sold off, even though you'll be having drawdowns, but still the market gives us a sell to the downside. And as well, we got this ascending channel at this point. Working with the structure, the overall market structure, the overall market direction, is a very powerful market approach. If you want to approach the market this way, will be profitable on the long run. Identifying the market direction, waiting for those pattern formations for a continuation, for a sell. If you are to get an uptrend, we have to wait for an inverted head and shoulders pattern. But in this case, we got a head and shoulders pattern in a downward direction of the market, which signifies a sell continuation. The reversal formation that we got at this point, not that the market is giving us an upward move. Okay, let's say the market gives us an upward move at this point, a little upward move. We have in mind the overall market direction, which is a downtrend, and we got this little uptrend at this point. On this little uptrend formation, we got the market giving us this head and shoulders pattern for a sell continuation to the downside. So what we have to do, just identify the neckline of this formation, then wait for the market to break and retest it for a sell. And we got the same thing at this point as well. We got the same thing at this point too. When the market giving us this left shoulder at this zone, this left shoulder, the head and the right shoulder, the head at this point and the head at this point, and the right shoulder at this zone. So after this formation, we can see how the market give us a sell continuation to the downside, which is a nice market approach. Just identify the market direction and then wait for those pattern formations on it for a trade continuation. You are trading in the direction of the market, like you're trading in the overall market direction. You're not trading against the market direction. And we got at this zone the same formation as well. The market is giving us this left shoulder here, this left shoulder, the head and the right shoulder, which is a nice reversal pattern. and we can see how the market sold after this formation. We can see the market sold after this reversal formation that we got at this zone. You know, remember we have already identified the market direction, which is the market trend to the downside. So our point of interest or our point of focus should be on the sell side of the market, which we got at this point. You know, after this reversal formation, we can see the break of the neckline, then the retest of it for a sell. We got this small retest for a sell, and at this point, we are getting another retest too. We're getting another retest at this point for a sell continuation. So I'll be taking my sells at this zone. I'll be shorting 25.8 at this zone. I'll be using the lowest lot size 0.5 here for a sell. I'll be shorting this index at this zone. My stop loss will be above this our last highs. Our stop loss will be above this our last high at this point. I'm showing you guys how the trade played out, the result of the trade. So let's add more positions for sells. Let's add more positions for sells. I'm showing you guys the result of the trade, how the trade played out, and all of that. We could get a retest on this zone because we have a bearish order block at this point. We have a bearish order block at this point, so you may get a retest at this point, you know. But still, my first entry is at this zone, and I'm having my next entry at this point. Basically, I'll be having my next entry at this point. Then my stop loss will be above this our structure. You can see where my stop loss level is. I'll be setting that at the end of the video. If the market can give us another retracement at this point, we'll be taking more sells from this our zone. I've seen the market direction already, so there's no how the market wouldn't sell to the downside. There's no how the market wouldn't give us a sell-off unless we get a reversal formation, like an inverted head and shoulders pattern or a double bottom formation. Then we'll be scared of the market not giving us the sells that we expect. Like we got at this point, we got the market giving us this double bottom formation at this zone. You know, after this double bottom formation, we can see how the market give us a buy move to the upside. So until we get a formation of this kind, our interest will still be on the sell side of the market. You know, because this reversal formation, the break of the neckline, then we can see the market bought, like the break and retest of this our reversal formation. This is a double bottom formation, which is a bullish reversal, a break and retest of the neckline for a good buy. You know, until we get a formation of this kind, our interest and our focus will still be on the sell side of the market. So anyway, we get a retest at this point, taking more sells, you know, stop loss above this our structure, but I'm still expecting more sells on this index. So I'll be updating you guys on how the trade played out. So if you enjoyed the video, please smash the like button and subscribe if you're a new viewer. And to my returning viewers, I really appreciate you guys. A big shout out to you guys for making this possible. The 1,000 subscriber count, it really means a lot, guys. Let's do more and do have enough for the peace out.